All right, what is up, everybody? Welcome to the December 7th Sunday live stream. I am the one Lance B, Lance Brightstein. If you are new to this channel, I was Trillium's top trader, trading there for over a decade. I set their all-time P&L record, and now I am a mentor to 7- and 8-figure traders here to help you educate and step up your game. Throughout my career, Sunday sessions were some of the best sessions I ever did. That's where the markets are closed, you're refreshed, you're focused. A couple hours on a Sunday helps really prepare you for the week, helps you really digest a lot of the charts and the information and the patterns. So that is exactly what we are going to do here today. This week's focus is going to be on MSTR, which is now just strategy, not MicroStrategy, and Bitcoin. So let's see. What we're going to start with first is our good old-fashioned disclaimers, which despite people's protests, I need to do. And so this is all just simply educational purposes. This is not investment advice. My decisions trade minute to minute, second to second, day to day. This is simply to educate. Do not trade based on anything I say. Trading involves risk. Make your own opinions. I am not responsible for any losses, or, as always, if you get attacked by a flock of pelicans, that has been happening more and more recently to my subscribers, so beware. All right, now let's dive in, but first with a story. So over the last month in November, I know a lot of traders have ended up struggling a little bit. It was certainly a slowdown from October, but one thing that kind of grinded my gears, if you will, which is, I guess, old person terms for me knowing I've now turned into a curmudgeon, is like this market isn't really slow. We have had a lot of action, and if it's slow for you and your playbook, that just means there's time to expand. And what I find with most traders is the second they start labeling a market as slow or shitty or the market sucks, is they don't take the time to find out where there might have been really good opportunities. Last week, I had the S&B Capital monthly team review calls, and it came up again and again how some of the younger guys would find it slow, but there were opportunities there. One of my really good friends, Shark, one of the top traders at SMB, had his best month of the year. And I'll be quite honest, November was one of my best months of the year. So there were a lot of opportunities there. It's always up to you to find them. And once we start to label things as not opportunistic, we don't do the deep thinking to take the effort and look back and say, hey, is there something there I should be learning? So now let's dive in. And as always, if you haven't hit that subscribe button, do me a favor, return the love on this wonderful Sunday morning. And now let's go into it. So I think most people following this channel, you're aware of Bitcoin, you're probably following Bitcoin. I think probably most traders on earth now follow Bitcoin. So over the last couple of years, Bitcoin has kind of been doing its thing, and that's fine. And over that time period, MSTR, which theoretically was a software company run by Michael Saylor, he has been acquiring Bitcoin. And so this strategy, which they renamed it, which now makes it extra confusing. It's so annoying now that it's strategy because it just confuses people in my normal speech. But what this company has done is they've become a Bitcoin holding company. And so in theory, the software side of this business is negligible. So to simplify this, let's say they bought $100 worth of Bitcoin. If they buy $100 worth of Bitcoin, all things held equal, the company should be worth about $100, excluding debt, salaries, all that other stuff. What's happened, though, is the company has acquired billions and billions of dollars worth of Bitcoin. And that makes the salaries, that makes a lot of the software side totally negligible. So for the purposes of just simplification, we are going to think of the value of this company versus its Bitcoin holdings. So in traditional finance, the way you would think about this is MSTR should trade at about a 1.0 relative multiple relative to its Bitcoin holding. Now, what ended up happening is it did anything but that over time. So there are reasons why MSTR should trade at a premium or perhaps at a discount. So if there's no other way for equity holders and institutions to get Bitcoin exposure, like let's say they don't want to hold assets at Coinbase, or let's say they don't want to deal with Bitcoin futures and rollover, what you can do is buy MSTR. And when MSTR is the only stock on the block that can do that, that might make sense for why it could trade at a premium. And I would argue that is why MSTR was trading at a premium. But now, all of a sudden, over the last year, in 2024, we had a lot of Bitcoin ETFs come out. We have stuff like IBIT, the iShares Bitcoin ETF. We have stuff, not BITF, but we've had all these different Bitcoin ETFs that you can now hold Bitcoin the same way that GLD holds gold. And that kind of negates the whole reason why someone would need to pay a big premium for MSTR. So that at a basic level is important to understand the context of the stock. The other thing I would say is, unlike most arbitrages in finance, when something's overvalued or undervalued, it really ends up just a matter of subjective opinion. Stuff like Tesla. Is Tesla overvalued? Is it undervalued? I have no idea. It's very subjective. You have very smart people on both sides of the argument. But now here's the magical thing about MSTR. When MSTR is at a premium, what you can end up doing is you can then sell your equity and buy Bitcoin. So if MSTR is trading at a really big premium, you sell it at maybe like a 3.0 or something, and then you're able to, one sec real quick. Okay, so then you're able to sell it at that premium, then they can buy Bitcoin with it. So that's a way of effectively selling an expensive stock and then closing that arbitrage over time. So all throughout here, what MSTR was doing, hold on, looks like my, it's frozen a little bit on me. Might need to restart this. So what they ended up doing was selling their equity to then buy more Bitcoin. Uh-oh, we've got a problem. Okay, we're back, folks. Sorry about that. And so that helps close that premium. Now, the other thing is, let's say MSTR goes and trades at a big discount to the premium, or to the net asset value. What they can do is they can sell their Bitcoin and then buy back stock. So in theory, those mechanisms, unlike most overvalued or undervalued, that is a real true financial mechanism to close that premium, which is why for so many people, shorting MSTR at this huge premium and then buying Bitcoin was this amazing trade that a lot of hedge funds were doing. In fact, I would argue the reason why this whole opportunity last year happened was because a lot of hedge funds that had been shorting MSTR for that arbitrage got blown out here. So now what we can do is there's websites, even like MSTR very openly publishes their NAV and everything based on the Bitcoin holdings. So what you can see here is things really spiked a ton back into November that we just looked at the chart. Since then, a lot of that has paired, and now we're approaching a 1.0, which is going to be where the magic happens. And so, in my view, MSTR should have never been up here to begin with. It was inevitable that this was going, that ARB was going to close over time, and so a lot of retail was buying the stock. They were true believers. In fact, in my opinion, they were uninformed idiots that deserved to lose their money due to ignorance, and they were leading MSTR to be inefficiently priced. And so what ends up happening is Bitcoin over the last year does amazingly, amazingly well. Like, I guess, yeah, call it November-ish through now. Bitcoin goes up a ton. MSTR, though, does not perform well. In fact, over the last year, it is absolutely collapsed. And it's my belief that this really should have never been up here to begin with. And also what ends up happening is the frothiness in the markets over the last couple months have died. That's why you see stuff like QBTS that has died quite a bit. That's why you see stuff like Oklo that has pulled back quite a bit. That is why a lot of the really big speculative names have pulled back. Froth has kind of died. And with it, so has the premium of MSTR to Bitcoin. So now that brings us to present day and as of the last couple weeks ago. So Bitcoin also, given the strength in speculation, wasn't doing well. Then since October, we peaked but cracked really hard. Then we made a low below these lows. We made a lower high. We made a lower low. We made another lower high. And this was a really, really big move. And this is where things start to get interesting and what I really want to talk about. So for starters, if you've been following a lot of the stuff I do, if you follow my videos, you recognize that back here on November 21st, oh God, my Thinkorswim's freezing again. Don't do this to me, Thinkorswim. Man, I don't even have that much stuff running. Let me see if I can clean up some of this stuff. But I don't even have that much open. Oh, there we go. And so this really capitulated. So for me, on November 21st, Bitcoin was a massive long opportunity. So, I mean, I even tweeted this in real time, not tweeted, but on the Discord I shared this. And like, massive volume capitulation. This was my typical overextended flush out. And so I got long Bitcoin. And so during this, though, MSTR is also getting hammered. And MSTR is getting into the news. Oh my God, they've got all this convertible debt. They've got this dividend payment and everything that they've got to do on the convertibles. And so what you see here is the premium goes from a 2.0 for most of this year all the way down to a 1 and even below a 1. So that's fascinating. So why should it trade below a 1? I mean, there's all sorts of reasons. Like, for example, they've got all this convertible debt. In theory, they've got to pay the debt. And the other thing is they said more recently that if it trades below a 1, they're willing to sell their Bitcoin. I think that was the first time that MSTR publicly acknowledged that there would be a situation where they would sell their Bitcoin unless forced to do it, because their whole motto has been HODL. So with that fall in Bitcoin, MSTR ends up getting cracked. But here's the thing, it never really capitulates. That being said, I was bullish on Bitcoin bouncing, so nevertheless, I still bought a little bit. And Bitcoin, in fact, did bounce well. Like this was like amazing. This was like an amazing little swing trade. This was one of the best trades, in my opinion, of November. You know, I always dissect those as the course, but for many reasons, that Bitcoin, this was going to be a great buy. And this, to me, with decent probability, stood the chance of being at least the bottom until, you know, year end, because this had a lot of stress in the system. And what ends up happening is MSTR is trying to bounce with it. And on this day, December 1st, MSTR then came out with that press release and that presentation, which said, look, if we trade at a discount, we are willing to sell Bitcoin. So in my opinion, this changes the dynamic of MSTR permanently, like, and just the sentiment and the views around it, because this was this like devout Christ of Bitcoin, Church of Bitcoin. Everybody needs to HODL MSTR and Bitcoin. And then all of a sudden they're saying, if we get at a discount, we're going to sell the Bitcoin, which ultimately is logical. Like they should be doing that. They are making the right financial decisions. They should be issuing the convertible equity up here. And if it gets down to it, they should be selling the Bitcoin to cover the dividend and also just buy their stock. So we ended up getting this huge flush out. So now here's the thing. Let me see if I can get this up. 1 second. I want to show you a tweet from the short bear. And that's what we're going to focus on from here. What's going to happen going forward with these names? So the short bear is one of my good friends, Lucas. He is very, very smart. He is one of the greatest trader stories ever. So let me see if I can find this. I think it happened December 1st. Damn guy tweets too much. Okay, here we go. So here's his tweet. Does MSTR equal Tesla in Jan 2023? So just for the people, I mean, I understand the reference, but if you don't understand the reference, oh my God, Thinkorswim, you're killing me. God, it just doesn't work well with the streams, all my memory. This is troublesome. I might need to switch platforms at some point. Oh, there we go. Okay. It just takes up too much memory. And I know everyone's been harping on me to do to do trading views. So maybe it will be time if I do more of these streams. It just makes it super tough. Okay, here it is. I got to go back a little bit more. So in Jan, or sorry, it was Jan of 2023, Tesla just gets absolutely smoked. Sentiment was awful, and the thing is, like, it just got crushed. 300 to 100, sentiment is awful. That sentiment being so bad and this massive sell-off was sowing the seeds for a huge reversal, and that's exactly what happened. So that's what he's equating this to there. And oops. And everyone was calling Tesla bankrupt and a zero, and we were getting that sentiment on December 1st about MSTR for sure. And so I shared my opinion, and I said the main issue with expecting a huge medium or long-term bounce out of MSTR and flaw in the analogy is that MSTR should never have been at those silly premiums to begin with. This down move is more of a move towards equilibrium than away from it, especially given market sentiment. That said, short-term oversold for sure. And even Moist Mango, another trader who is just phenomenal and I'm privileged to call a good friend, he even shared this image. And this image is going to also reflect my views. And I nicknamed him, because I call myself the TheOneDaVinciB when I draw in paint. So he's Moist Picasso. And he did this drawing. And essentially this axis here is NAV of 1.0. And he thinks ultimately MSTR stabilizes around a net asset value of 1.0. And for the reasons I was discussing. So when I look at this chart now back in MSTR, Short Bear was arguing, is this going to be a big picture bottom and we get a big bounce from here? Oops. And my argument was no. I don't think we're going to get a really big bounce where this goes up 100%. I don't think we're ever going back to these premiums because in my personal view, these premiums should have never existed. It was only through the nonsensical stupidity of bag holding retail that this ever existed like this. Wall Street bets, Bitcoin going to the moon, MSTR going to the moon. Oh my God, it's just going to keep going, going, going. This is just the beginning. Rocket ship emojis, all that bullshit. All that bullshit is ultimately what ends up bag holding all the uninformed retail, which is super sad. It's just people that are trying to make money the quick way rather than learn trading or investing the proper way. So this to me was just inefficient garbage. You can't view this as like a long-term anchor. And so when we get this capitulatory price action, this was the biggest volume bar. And so it's likely when you capitulate and sentiment is so bad, like I always talk about this pendulum concept. Sentiment was swung so far to one side that when sentiment gets so apocalyptic, that is when you can get these reversals, especially on big volume capitulations. And so that's exactly what happened here. So I ended up selling puts, I ended up with long exposure, and I caught this move. That being said, am I expecting some bigger bounce? No. So I've already reduced almost all of my exposure. I mean, the difference between sub 160 and being in the 180s, that's a really big difference. Because again, I don't think the market context is supporting stupidity right now either. We are seeing AI start to get punished. We are seeing the hopium start to get punished. So one day, could things get stupid again? Sure. But that's not a bet I want to be making. Like I said, for the most part, I believe in this Moist Mango or Moist Picasso's drawing, which is over the long term now, people recognize this mechanism. The retail has been totally flushed out. They are getting crushed. And we will just oscillate around an MNAV of 1. And so look, we might bounce to 200 or 220 or 240. But do I think Bitcoin held equal that we're going to go to 300 or 400? No, I don't think that's going to happen. So maybe this does something greater, but at the same time, we really didn't have like some mega panic. Like this could flush to a lower discount. This at least was a near-term bounce for sure. But could it get worse? Absolutely. Because here's the issue. My bigger issue is I'm not particularly bullish on Bitcoin. Bitcoin's price action was absolutely garbage this year. At least post like the first half. In more recent time, the last 6 months, the price action has been awful. super relative weakness. And now here's the thing. Bitcoin was relatively weak at a time when Bitcoin treasury companies and crypto treasury companies were pumping billions into the market. So in no way do I think that Bitcoin is going to have some amazing go to the moon thing. Most of the people you read online, they are long-term Bitcoin holders that have done well being long Bitcoin, and they cannot see the market as anything but bullish. No matter what evidence you put in front of them, they just say bullish. Every down move is to flush out before the next big up move. Oh my God, this is it. This is the healthy pullback we need to go to highs. Oh wait, no, this is the healthy pullback we need to now go to highs. Oh yeah, this is now the big healthy. It's like, come on, people. The price action sucks. The chart sucks, and the fundamental story behind it sucks. You can't keep on going up at the rate Bitcoin was going up. It is literally mathematically impossible. So the people that were calling for the $1 million price targets, keep on dreaming. In any form of near term, it is just nonsensical. The Cathie Woods out there and everything else, it is just charlatan bullshit, founded on no reality but hopium. And so I do not think Bitcoin is going to do anything crazy. Can we eventually go to highs over the next year? Absolutely we can. But the price action sucks. We can't even bounce above 100K near term. So as a result of that, my views on MSTR are extremely tempered. I also wouldn't be shocked if over the next, I think this was a near-term bottom, like big flush out there. Sentiment was pretty poor. So again, I don't think Bitcoin's going to lows over, anything can happen, but I don't think it's going to lows over the next week or two. But this is not still all that healthy of a bounce, right? And one of the biggest arguments, and you can go back through my Twitter. I have been tweeting this the whole year, especially in August when the relative performance of Bitcoin was so poor. Bitcoin is a reflective asset class. There have been academic studies on this. The reason why 80% of people hold Bitcoin is simply speculation. They are holding it because they are expecting it to go up 10x, 100x. They are holding Bitcoin because they want to buy a home and they want to retire off of it. So the reason why Bitcoin has gone up is because other people think it will keep on going up. That there's no fundamental value. There's the fundamental thesis to it is it serves some function, but should it ever justify some crazy market cap? Who the hell knows? There's no cash flows tied to it. It's really hard to value. It's purely just valued on vibes. But what happens when for the first time in a bull market, Bitcoin did dog shit? In an era of speculation, it did not perform. It was not going up the 10x that people expect out of it. So now what happens in a negative feedback loop where people that are holding for the moon all of a sudden say, what if this doesn't go up? If you go on Twitter, people view Bitcoin as this safe, risk-free asset that just over time will go up. That is not true. Nothing is like that. And so my view is if Bitcoin has this lost period, not just of a couple months, people talk about these crypto winters that last maybe a couple months to a year. What if Bitcoin doesn't keep up with inflation or equities over a 3-5 year period? Who is going to still hold Bitcoin? What institutions are still going to get behind it? And that has the potential to create these negative feedback loops. So I have no idea what's going to happen. I have no strong view on Bitcoin other than 1 million in the near term is nonsense. This going to highs in the near term is nonsense. And ultimately, I'm going to just listen to the charts and the price action at every step of the way. But for MSTR, I don't view this as going back to 340 all held equal in Bitcoin. I don't even think I hold this going back to 280 all things held equal. Can this maybe end up in a 160 by 240? Yeah, maybe, depending what Bitcoin does. But for that reason, this was an opportunity to catch, and this for me was enough. I was just doing prior bar lows like I normally do, and that was an awesome trade. I think Lucas, my suspicion is I think he views this big picture than I do, and that's fine. Lucas is an amazing trader, and truth be told, Lucas is an infinitely better trader than I am. Nevertheless, Lucas needs to trade his game plan and his views, and I need to trade mine. And this, for me, was the leg I wanted to catch. That's my views on Bitcoin. That's my views on MSTR. given this flush out, absolutely MSTR can go higher. But my bigger point is that 400 plus, 350 plus, that should have never existed except for nonsensical retail that have now been taken to the cleaners, and I don't think that's coming back. Okay, what other things do I want to say now? Let's see. For those that struggled in November, or we're still playing a lot of the strong momentum, a couple things I want to talk about. I did this video response to Kyle Williams, which is, where is it? Yeah, right here. If you're someone that struggled in November, or if you just want to learn more about the nuances of sentiment and how to spot when market sentiment is changing, and so that you can adapt your strategies more proactively, this video, 100% free, is a goldmine. Kyle, one of my 7-figure students that I am close friends and mentor with, great, and one of the nicest guys on earth, for the record. Nobody, the only person that might be equally nice but not nicer than Kyle is David Hanlon. Two just incredible guys that just share their knowledge. And he had the worst month of his career because he failed to recognize some of the nuances in the changing market. And he has grown so much this year on swing trading. And I think this year was a year when swing trading worked really well. So this video, if you struggle with spotting changes in the market, I discuss all the nuances that could have allowed Kyle to pivot sooner. So now another thing I want to discuss, especially as we head into year end, given that it is December 7th now. This is the time to start doing your annual review. So many people hold off on this analysis. Like, I am someone that I am gung-ho, let's go, let's do this right now. Let's not even wait until January 1st. I want all of you, over the course of the week, by Christmas even, to do your annual review and study what you could have done better. I have some videos coming out into year end on how I perform my annual review. I'm going to deep dive into how to collect your data, what patterns to look for, so subscribe to the channel. But listen to me now. December 7th, you're going to be able to get a head start. Start going through all your trading data. Do you know which playbooks you made the most money in? Do you know which playbooks cost you the most money? Where did all of your time go? What did you work on improving on? Where are you losing P&L that you shouldn't be? Are you over trading? Are you mentally checking out on Friday afternoons? Are you trading best off the open? Did you have a lot of opportunity pre-market? Did you expand your trading into options and futures this year? Have you expanded into overnight? Have you built a trading pod? Start to look through the course of your year and do that analysis. Where's your P&L coming from? Where's it losing? And what I want you to do is I want you to come up with the number one constraint in your trading. And I'm going to talk about this a lot more in the future. And this is something Alex Ramosi is huge on. I want you to go through all that data. And again, this should not be a 1-hour project. This should be like a 5-day to 7-day project. Go through all that data, truly reflect, sit with it. You do not I'll say this sometimes, then I'll get an email from some of the traders I work with 2 hours later. It's like, dude, take a breath, spend some time, really reflect on this, and figure out what is the one constraint in your trading. If you had to change one thing, or if you succeeded in changing one thing, how would you double or triple your P&L? And that one constraint is going to be the thing I want you to focus on in your goals. And I want you to start to think, how can you build a system for achieving that one thing? Forget all the times, all the places your time gets sucked to. Trading, there's an infinite universe. You can work on filters, you can work on your trading pod, you can work on your trading data, you can work on hotkeys, execution, you can work on getting better borrows, you can work on building out new strategies. It is an overwhelming mess, and most traders diffuse their energy over too many things. So your goal over the next couple weeks, study all your data. You need to know all your biggest trades, all your biggest losers. What strategies were a total waste of your time? Or what patterns are you missing under the hood? So to give an example that happens when you analyze your data, and this is the example I always tell. When I was running an office in Chicago, there used to be traders that I had under me. They were newer guys, and they said, oh, I'm really good at IPOs, and I make money in IPOs. And as a result, they were trading every single IPO that came out. So here's the reality of IPOs. 10 IPOs will come out, 8 of them will be dog shit. Dog shit names that nobody trades and just aren't that in play. Then there will be 2 hot ones. And so they kept on trading the dog shit IPOs. And I said, hey guys, why are you trading these shitty dog shit IPOs? And they said, Lance, we ran our data. We make money in IPOs. And I kind of laughed. I immediately knew what they did. And I'm like, look, you got to go back to your data and find out what you're missing. And so what they found out was, which I already knew, that just because I do it myself and I see a whole trading floor, they did make money in IPOs. The issue is they made money in the 2 hot IPOs. So let's say they would make 50 grand in the 2 hot IPOs. In the 8 dog shit IPOs, they would then go and give back $30,000 of the $50,000 they made. So when they looked at their data, they would look at it and say, oh, I make $20,000 in IPOs. But the truth is, they made $50K in the 2 hot ones that they should be trading, but weren't looking granular enough and studying the nuances to realize that they shouldn't be trading the other ones. And so that simple change to their trading. Think about this on a P&L basis. Let's say they only traded those IPOs. They were making $50,000 in the hot IPOs. They were losing $30,000 in the dogshit IPOs for a net profit of $20,000. Now think about how simple and how levered that one change is. All they need to do is stop trading the 8 dogshit IPOs. As far as solutions go, that is a very, very, very easy fix to do. In fact, it's one of the easiest fixes because it just means you need to remove something. You don't need to do something hard. And if they removed those 8 shitty IPOs, they would then make $50,000 in that strategy. So their profitability would increase 150% due to one change. That is an amazing high leverage strategy. And then even better, because their win rate increases and their expected value on that strategy increases, they can then size those hot IPOs up. So all the P&L and risk they were allocating towards the shitty IPOs, all of that can be snowballed and allocated and parlayed into the hot IPOs. And that is how you get traders that break out on rocket fuel. So when I mentor traders and when I work with traders, if you wonder some of the things I work with them, it is how can we find that one constraint? How can we make sure that constraint is justified by data? And how can we build effective solutions? And when you find those solutions, it's insanely, insanely effective. And you can have a trader that isn't making money, and with a few changes, you can turn them into a profitable trader. That is leverage of making the really good decisions. So that's the analysis I want you all to do into year end. And I will have videos coming up in the future on this. So that is my spiel. That is the lessons I want to impart with you every Sunday that I can manage this. That's kind of how I want to frame these going forward, is have a big picture lesson, but then have the little add-on tangential stories and lessons to help you all. Couple quick questions. Jero's asking, was there data to determine what made an IPO shitty? And so yes, there is data on that. So for starters, you can measure things like, so first of all, part of it's qualitative. I think we all know that, stuff like CoreWeave was going to be a hot IPO this year. Stuff like Circle was going to be a hot IPO. If an oil and gas company IPOs, that generally is not a hot IPO. If some shitty blank check bullshit IPOs, that's generally not going to be a hot IPO. Alibaba, Beyond Meat, anything that's way oversubscribed. So stuff that's oversubscribed is a factor you can pay attention to. Where something is indicating an opening versus the IPO pricing is a huge factor. Is it getting talked about on CNBC? For the hot IPOs, if you want a simple heuristic, the hot IPOs, when they're coming out, that is all CNBC talks about. You see the headlines on Bloomberg, on Reuters. CNBC devotes the whole day, the countdown to the hot IPO, the countdown to Circle being open for trading, the countdown to all these hot names opening. Like when ARM Holdings IPO'd, that was a really big deal. So there are qualitative and objective ways you can measure this. And so that's one of those questions where when I talk about doing the deep work, Jero's question is an amazing question to ask. And then what we can do for ourselves is do that deep work. How can I identify these? Can I pull up a list? And look, Look, I mean, I'll even do this with you for fun. And I mean, I can even pull up, do I have Gemini on this tab? Let me go to Gemini real quick. So we can even ask, oh God, for the love of God. On one of these, I have the Pro tab. I'm on the wrong tab right now, the wrong account. But what were the last 100 IPOs? So while that runs, oh God, let me actually make this more clear. What were the most recent 50 IPOs that debuted in the US market? So this is how you can start to use AI to collect your data and run analysis. And then we can even ask Gemini, what do you think were the hottest of those 50 IPOs? And we can ask Gemini, how would you measure this? And we can see if our subjective feel lines up to that. And we can see how big was this IPO in market cap, how oversubscribed was it, and we can collect that data. A lot of that data is available, and you can see hey Gemini, where did all of these IPOs price? ChatGPT, where did these IPOs price? And so all of that is going to be important. And so that's how you start to do the deep dives on some of this work. So let me tackle a couple questions. Meanwhile, so quick thought on Carvana, since it was just added to S&P, doesn't the index have to purchase shares when a company gets added? Yes, a lot of this stuff ends up getting arbed out. So I guess I'm not sure the question, but yes, the indices do purchase Carvana shares when it's added to the index. But a lot of that gets arbed because all the different quant firms are making bets on which stocks will get added. There's a lot of analysis and thought that gets into it. Okay, so let's see how this does. So most recent IPOs. So essentially what this spat out for me is a whole list. Okay, so a lot of when you look through this, so a lot of these are just SPAC acquisition co bullshit. And so, I mean, a bank corp, no one gives a shit about a bank corp. And so even as you scroll through these, you can just look through what are the names that I really recognize. So as you look through, you'll notice that most of these IPOs are bullshit. Most of these IPOs we have no interest in. So blah, 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 blah. I mean, a lot of these are just total crap. And so here's the thing. So if you're trading all the IPOs, it's going to end up, you're going to end up losing, like exactly I said in that example. So now what if I say, what were the hottest 20 IPOs in recent memory in the US? Stocks like ARM Holdings and Circle that had a lot of hype and oversubscribed and news coverage. So we'll see how well that does for us while I answer some of these things. Is it worth trading at the end of the year? Yes, absolutely. It is nonsensical to not trade. Like, you never know when there's going to be a good opportunity. I mean, especially like when in my grind days at Trillium, my ass was in that seat. Like, there will always be opportunities. And guess what? The less people in their seat, the more people on vacation. That's when stuff can get, if stuff gets wacky, you're around to capture it when a lot of people aren't. Also, you're saying low volatility kills directional trading. You don't know that there's going to be low volatility at the end of the year. For all we know, into year end, some crazy thing can happen and we can be at VIX 40. Like, there's no way to know. Like, I try not to, like in psychology terms, what you're doing is projecting into the future. Like, we don't know what the future holds. And so as a result, it's like, I'm not going to assume anything. When there's opportunities, I want to be there. Like, I'll see all the time on Twitter, people say, people will say, oh, the summer's traditionally slow, or September's traditionally slow, or whatever's traditionally slow. Those patterns are just total bullshit. Like, dude, just trade what's in front of you. This year was insanely active. There's some years where the whole year is slow. You know, do your rest and recovery then. This year has been literally the second most active year I've ever seen. Okay, look at this. Look at this list. I mean, already, yeah, Reddit was a hot IPO. Instacart was hot. So super heavyweight techs, Rubrik Tempest. I mean, some of these aren't that amazing. I mean, Kava was a big one. And so what you can do is you can start then going through these charts. You can go through these charts and pull up and study these and do these meet the criteria, which were the absolute best of the best. So that's how, you can go through and do a lot of this analysis on your own. And so one final question I'll take. I saw saying I trade what I see, not what I know. And yeah, I mean, and this came up in Dubai when I was working with the trading firm out there. So much of trading is it's okay to have a fundamental view or a thesis. For example, take Circle. Circle was one of my best trades of 2025. Literally ever since it topped, for months and months and months, I was saying I'm going to be shorting every single pop. My goal was to hold a core position of 20,000 shares short into the end of the year. And so my whole thesis was this Circle is going to absolutely die into year end. I want to be holding this a core position short. And so I was shorting all the pops, working around a core position, then even just buying puts into this end of the year breakdown. This was one of my best trades because I had a view on the stock. And that being said, I still used the technicals to structure my trade. When this was going up and trending higher, I didn't short anything really on the front side. I minimized my losses. If I had a view that, oh my God, this is going to go lower, I would have blown up. And in fact, there were hedge funds blowing up. The margin was exploding higher. And even this day, there was a hedge fund blowing up. I believe it was $245, someone getting margin called. And that was the opportunity. So because I didn't get owned, because I was listening to the technicals and my strategy and not just my view, I was able to wait for the backside. I was able to capture these moves lower. I was able to work around a core and short the pops. And so I traded a thesis, but I traded it using technical analysis and a system that allows me to apply risk management and structure trades in a way that I find have edge. So the best trades, it's okay to have a thesis. But you don't even need a thesis, honestly. At the end of the day, I trade the chart. 90% of my decision making is going to be chart based. Anytime I don't trade the chart and I get stubborn or I fight the chart, that's when I get into trouble. My goal is to always be with the trend. I always want to be with the trend or the counter trend, with the trend or the counter trend. So even take something like BTC. I wasn't short BTC. That being said, it's a totally viable short to short here. This is with the trend lower. Then once we capitulate, I'm capturing that counter trend. So I always want to be with that trend or that counter trend. I always listen to the chart. That is what good trading is. And I think that is our competitive advantage as traders. So always listen to the chart, stay nimble, stay open-minded, and recognize that it's okay to have a thesis, but when thesis plus setup and the chart confirm, that is when our best trades happen. So, all right, that wraps up another wonderful Sunday session. I hope you all learned a lot from this. I am going to keep on doing these as schedule permits, but please, I do these because I'm trying to build my YouTube channel. So if you want to return the favor, please comment, like, subscribe, share this with your friends, spread the good word because I want my good content out there away from all the furus, the bullshit, the scammers. There is so much bullshit out there. So I'm trying to do a good thing for the community. Get my knowledge out there, spread the word. Thank you all so much for the support.